So today I will discuss Starbucks company overview and its financial analysis. So let's start. Starbucks is the largest multinational chain of coffee houses in the world, with its headquarters located in Seattle, Washington. To date, it has over 7,000 coffee shops and kiosks in the United States and nearly 3,000 in 34 other countries around the globe. Despite the challenges caused by the pandemic, Starbucks has made a successful recovery, and by the end of 2021, the company saw a 23.57% increase in its annual revenue compared to the previous year. Thanks to its drive-thrus and digital orders, the company received more customized orders, which tend to be larger ticket sizes. Their Deep Brew AI data-driven technology also contributed to the company's growth by personalizing customers' orders, optimizing store labor allocations, and facilitating inventory management in the stores. On this slide, we can see the company's current interim CEO, Howard Schultz, and the incoming CEO, Laxman Narasimhan. Last month, Starbucks announced its 3-year reinvention strategy aimed at automation of processes that can help cut the wait time for customers and reduce the amount of human labor required for an order. As a part of their plan, they're planning to open more new stores in the United States by 2025 in order to meet a growing demand for drive-thrus, mobile ordering, and delivery. The plan also mentions the expansion of the company's key international market in China, as well as improving their employees' benefits program and boosting its Starbucks Rewards loyalty program. Although the company's long-term strategy is aimed at growth and expansion, there are certain changes in its plan that signal serious problems in the company's operations. As a restaurant business faces rising costs to run a business and social changes, Starbucks had to take a shift to digital, and some might even argue that it cost the company its brand. Although digital technology can facilitate customer service, it cannot replace face-to-face interactions and personalized approach to every customer, which is embedded in the company's mission statement. Numerous complaints from the company's employees that feel overworked and understaffed explain the decrease in the customer satisfaction and the massive shift from dine-in experience to pick-up and delivery orders. In addition to some internal problems, the coffee house giant is also facing a competition from a few fast food companies such as McDonald's and Dunkin' Donuts that added coffee beverages to their menus in the past years. So, to make the barista's job even more efficient and faster, the company introduced a new cold beverage system that will allow an employee to make a drink faster, as it was demonstrated at the conference by the Starbucks employees. As a part of their employee benefits program, Starbucks introduced an increase in sick pay, new savings plan, and student loan assistance program, hoping to reduce employee turnover rate. So now I will discuss the company's financial statements. For the fiscal year ending October 2, 2022, Starbucks reported annual revenues of $32.25 billion, with the majority of revenue coming from the company's operated stores. This is an 11% increase compared to the previous year. Overall, the company has a stable growth in revenue of an average 8% over the past 6 years. As a result of both high inflation and the company's investments in operations, the company's operating expenses increased by almost 14% year over year. The company's gross profits also slightly decreased by 0.24% compared to the previous year. So now I will discuss the company's balance sheet. The company's debt has doubled since the pandemic began in 2020, and it still remains high through 2022. For the year end 2022, the company reports 23.8 billion in its total debt obligations, with the majority of its debt coming from long-term debt. The company returned 6.3 billion to its shareholders in fiscal 2022 through share repurchases and dividends. As a result of issuing new debt and generous returns to shareholders, the company has had a negative shareholders' equity since 2019, with total liabilities exceeding total assets. Speaking of the company's cash flows, Starbucks' annual cash flow from operating activities for the year 2022 was $4.4 billion, which is a 26% decline from the previous year. The change is primarily due to lower net earnings, high inventory purchases, and timing of income tax payments this year. Cash spent on investing activities was $2.1 billion this year compared to $0.3 billion used in 2021. The change comes from a significant increase in spend on capital expenditures. Cash used on financial activities was $5.6 billion this year, compared to $3.7 billion used in 2021. This is caused by a shares repurchase program that was suspended this April by the company's CEO, with the purpose of investing the money in the company's employees and stores and the company's overall growth. So now I will discuss some of the important financial ratios. Starbucks has a negative debt to equity ratio of 4.22, which means that the company has more liabilities than assets. In general, in this case, the company would be considered extremely risky. However, in Starbucks' case, the risk is partially offset by the fact that interest payments on their debt are well covered by the company's earnings, with an interest coverage ratio of 9.2. Speaking of their profitability ratio, the company's gross profit margin in 2022 was almost 26%, while its operating margin was 14.32%, which is significantly higher than the average operating margin of 3.5% for a restaurant industry. The company's return on assets for the year of 2022 is 11.73%, which is also higher than the average 10% for the industry. Starbucks' current liquidity ratio is 0.77, which is significantly lower compared to 1.20 last year. The company's quick ratio is 0.48 as of October this year. In general, the liquidity ratio is lower than 1 means that the company might not have enough liquid assets that it can quickly convert into cash to pay its short-term bills and is considered a risky investment. Overall, I think that Starbucks is a good investment option. The company remains a leading coffee chain in the world while delivering consistent quality coffee beverages and the food. Even with higher labor costs, coffee, and leasing costs as a result of inflation, the company is still delivering a strong performance compared to its competitors. Although it does have a red flag as a negative equity, Starbucks' main asset is their brand and trademarks, which you cannot find on their balance sheet. With that being said, I think that the company is a good investment option for value investors. Although additional analysis such as financial valuation models must be conducted prior to investment.